Hey traders, this is Christian from Market Trade Group, and it is Tuesday, March 23rd. Risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. And another crazy day, action-packed day. I have theme of the day up here, small caps, biotech, commodities really hit hard today. Part of this was the stronger dollar, but it just kind of seems like it's something different every day that's going on. We're not getting a lot of solid trends, I would say, to trade right now. We're getting a move in a couple day move in some things. I thought the FANG stocks were holding up pretty well today for this, maybe the second day in a row. Facebook was a nice trade that I traded yesterday. And then a little bit of follow through names like Amazon. A lot of the closing type trades from last year, the Procter and Gamble, the Clorox, the Amazon, CTSX was another one. It was very odd. Now we did hear some rumors about. I heard one story about somebody getting vaccinated in Hawaii and they apparently got COVID. We're hearing that Brazil's cases are continuing to kind of spiral higher. Italy's cases are going higher. So it's tough to know if that's the reason for some of those moves or if it's just a little bit of rotation. Because we did see, the bonds for the second day in a row. We don't. Yeah, you didn't hear about that as an issue today. That yields were going higher. This was the second day of a bond rally or move off the lows. Notice that we did take out a Virgin point of control to the upside here on the 5 minute. Right, so we look at those things in terms of rally, places where things can rally. Sometimes they can fade. We also got to the top of value in TLT on the 1 hour, so that could be as far as we go in the short term, right around that 156.18. So you got a little bit of a counter trend rally in bonds, and then if we kind of also look at what got a lot of attention was the dollar. The dollar getting stronger, and you could see this in the UUP ETF. This was very strong a couple of weeks ago and then kind of stalled out a bit. And if we go to the weekly chart, you could see the relationship a little bit better here. But, so this is the thing that we talked about a few weeks ago that might be a cause for concern. Today, it kind of seemed like it was a cause for concern. The dollar up 60 basis points, and that kind of rattled things around. Crude. So we'll talk a little bit about this move in commodities. Notice there was this VPOC that was taken out, like I think right over here. I've got the right time frame on. Maybe it's the 20-year. But nevertheless, crude has been sliding pretty decently. Was down 6.8% today. Also, the metals and mining. So again, just very different than what very different than what we've seen over the last few weeks, where metals and mining has been very strong. Notice that did take out a VPOC. We did talk about this in copper. Going up on the weekly chart, there was this Virgin point of control that was taken out all the way up here, and since then, copper really hasn't been able to do anything. Sustained after that Virgin point of control that was taken out from all the way back in here. So that's a couple of the areas that got hit hard today. And then biotechs too, down 5.8% for the day. And you could see that, this move back is being now faded. So overall, very tricky. So let's go back to the S&P for a minute. Or before we go to the S&P, let's talk about the small caps for a minute too. The small caps again just kind of seems like, I don't want to say out of nowhere, but you just really didn't know. You didn't have much confirmation that that the upside was going to be resumed. They did fall into value towards the end of last week. Today is Tuesday, so this was Friday. This was actually Friday. Monday, we saw a little bit of a move back. The small caps were not particularly strong, but a big move down, 3.6%, no doubt, is a big move down, and that gets you right back below the 50-day moving average and back below value. So, just complicates things right now. So, difficult, I would say, to kind of get your arms around a lot of these moves. One of the things that we saw not only today when the market opened up, breadth was very weak. And we look at this indicator on the bottom left of my screen. When I see it all in red like that, I know it's usually a problem. And that was one of the things that was a little bit concerning about yesterday's rally. And even when we went through this exercise yesterday, and I talked about market breadth was particularly weak in Nasdaq, you could see how many of the declining names, 2631 in Nasdaq, so just a much higher level. Look at the new 4-week lows picking up too. That was higher than the new highs, and the FANG stocks seem to have masked some of the move today. Like that seemed to happen yesterday too. They were strong yesterday, and I think because they are so dominant, such a large weight in these indices, it kind of masks some of the weakness yesterday. So we definitely saw that more today. 2,631 declining issues and 331 only advancing. So very weak breadth for the day. So what else to really talk about with this type of market? Because I'm going to get to the conclusion in a minute here. But S&P, we talked about in yesterday's video that we did not get above value. It was a little bit of a tell, but it's tough. It's tough to know, just because we didn't close above value, if we were going to get, completely a decent move back. And if you look at the performance of the S&P, right, only down 70 basis points. So again, I think if we look at some of the movers in here, they're just not good. It's just the bigger names are kind of masking some of that weakness. Costco and we talked in yesterday's video too about the strength in consumer staples. So we'll talk a little bit about that, but only down 70 basis points. You were looking at just kind of look like it's an average day. So again, I think some of the larger names, the FANG names are masking some of the weakness. Qs, we talked about how they stopped right at the bottom of value yesterday, and I know a lot of people are looking at this possible inverted head and shoulders. That's still in play for the Qs, but you just kind of have to take it one day at a time. So I'm going to talk about a couple of relationships here. Right, the consumer staples were again strong. They finished up 40 basis points. Right, so this is not where we really want to see leadership come from. Right, and I talked about this SPLV ETF yesterday. That actually finished flat, so it outperformed. The relationship that I talked about yesterday was SPLV, so low volatility equities, not low volume, but low volatility equities. Over higher beta areas of the market. And, I said that this could possibly be the next retracement that we see. And sure enough, you did get a big retracement today. So this is a 5-year chart, but if we just want to look at this in terms of 1 year, we could see these low beta areas of the market begin to outperform for now. And I think that if we go back to the time frame that we're in, the time period that we're in, this end of March is just a very difficult time. And so it's the question right now, and I wanted to kind of share some thoughts of what I do in these types of time periods. And I always show the trade blotter. I'll show it again today. Hey, listen, I tried. We saw some price target raises in Netflix as well as Roku. I tried a Roku trade. It looked great in the first 10 minutes, but it ended up being down 4%. So it just didn't. I thought this would see the theme of kind of reopening, but it stalled right at the top of value. Netflix was a bit better. That carried. That also got an upgrade today. And this one worked pretty well. It was up 2.3%. I thought Amazon behaved very well until about the last hour and a half of the day. It's tough with Amazon though, because it seems like whenever it shows a little bit of strength, it just seems to stall out, and that's kind of what it did for the day today. Still outperformed, up almost 1% for the day. So, I tried a couple things like that. I did put on a consumer staples trade. I managed to get one target in that. A couple other trades, I tried trading a little bit of Peloton, um, and I got out of the trade a little bit too early. It actually finished probably finished right around where I bought it. But yeah, but it did make a high. It went out to 116, of course. So I was very disciplined with that one. And I said it's just too difficult. Powell was speaking, Powell and Yellen, and the tape was pretty difficult when that was going on as well. I got out of a trade that I put on yesterday. Stock, I mentioned that I'm just trying not to trade options because it's too difficult right now in this market, in my opinion. I got out of some residual trades that I had on. The semiconductors showed such nice promise yesterday, and look at what they did today, down 2.5%. So it's very, very tricky, right, to see some nice strength out of names like Lam Research yesterday. We did talk about where this thing got to yesterday. It took out a virgin point of control. Sometimes that's all you get, and that is all you got with Lam Research. Applied Materials was also strong yesterday, not so much today. So very, very difficult to put on swing trades in this environment because you're going to get hit on the head half the time if the way that these things are going right now. So where does this kind of leave us? Well, just to kind of finish the rest of the blotter here, but I just unwound a lot of things here because it's too difficult. I've seen this type of these periods of the market where it gets very difficult. And I could tell you that one of the things that I've tried to get better, try is the main thing, is to just try to get out of the market a bit while this jostling is going on. When the tape gets really difficult like this, you can't figure it out. There's too many moves, just like the semis were strong yesterday, and today they were not. They did the exact opposite. So if I'm more of a swing trader, right? And that's my bread and butter. That's what I like to do. But if the environment is not there, if we're not seeing trends materialize, then I have to wait. I can't force it. I have to wait until the market is giving us better trading opportunities. So what I would also I think what's also important here is, right, we're at the 23rd of March. Right? We know that this is a weak seasonal time frame. So if you could just make it past this week, and then I'm not saying that, once we get to April, things are gonna be wonderful. But I think once we get through end of month, end of quarter, things might begin to clear up a little bit, and just might become a little bit easier in terms of trends that we're seeing. But for now, I think that's why I talked a lot about this low volatility type trade, because this is what is showing strength right now. So if that doesn't appeal to you, and we've talked about this in some of the rotations that we've seen in the last couple weeks, then just sit on the sidelines and wait for some better trading opportunities, or try to scalp. And the other thing that I've outlined here is a checklist for a choppy trade. Smaller positions, less positions, little to no short-term option risk. Being patient is probably the most important thing here. And looking basically for singles, right, and not home runs in this environment, because the tape is just too whippy, it's too choppy, and that's it. But I will tell you that this has happened to me. So this is where I kind of wanted to share some experience. This has happened to me where I've gotten to the situation where I've had to unwind a whole bunch of positions and go more into cash. And I'll tell you, whenever I do that, it always ends up working out for me in the end. Remember, this is March of 2021. Last year, it was a very difficult trading environment around the same time. So keep it in perspective. A lot of people had wonderful years last year. I had a wonderful year last year, but it really didn't get going until we got out of March. Right? I had a very good January. I gave back some gains in February of 2020. And then I managed to be positive for March of last year. And then we got off to a wonderful year. So put things in perspective that You want to try to come out of these time frames that are more difficult with less damage. And then hopefully that will kind of set us up for the rest of the year. That's where my head is at for now, and we just kind of have to take it for how it comes to us. There's no way that I would have been able to predict some of the months that happened after March of last year being really, really good in terms of trading. So I'm not going to predict that again this year, but I'm going to let these trades come to me, and we might see some really good trading opportunities. But for now, maybe some of you are doing much better and trading more on the put, a little bit more on the put side too. That you can be making money on some of the short stuff, but I think just for me, I go into more defensive mode when the tape gets more difficult, and then I really will start to step on the accelerator once I start to see better looking trading opportunities and trends emerge. And that's why I'm kind of hoping for at this point, just for even if the market has to sell off a little bit more to get this kind of cleaned up and to get some of the complacency out of the market, which I've been complaining about for the last couple of weeks, is that everybody is just too complacent, right? Everybody has been looking to buy every single dip, right? That has to kind of go away, where people get a little bit more exhausted in terms of not wanting to buy the dip. That's when you start to see things turn and get a little bit better. So I don't think that I still don't think that we're there yet, where the complacency has been completely washed out of the market. Right, I've talked about Helene Meisler's polls that she puts out every Saturday. She's a great follow on Twitter. And 2 weeks ago, or I should say, not last weekend, but the weekend before, her poll, 65% of the people were thinking that the market was going to go higher, that the next 100 points in the S&P were going to be higher. That's way elevated. Last week, it was a little bit more grounded. I think it was more like 52-48 or 55-45, something like that. But it's still like we want to see more people think that the market is going to go down. And again, not made up answers, but actually feel that way. Then I think things will kind of come around and you may start to see more trading opportunities. Until then, if you have to go a little bit more, I'm almost all the way in cash at this point. So that sometimes is a signal too for when things kind of turn around. So we'll see, and take it day by day. Don't rush it. And I still think this year is going to there's going to be a lot of trading opportunities, but you got to get through the rough spots to be able to capitalize on those, and keep it in perspective of the whole year, not just a week, not just a month. All right, guys, have a great night, and I'll see you tomorrow.